Guys, we're going to talk about a lot of things. This Spaces on the weekend is all about preparing for the markets. And we can see, like, experienced people like Chad, Bernoulli, they're talking about markets being overvalued, let's say. So it's really important. The economic calendar, first of all, you've got CPI number, one of the most important ones. Then you've got OPEC monthly report on Wednesday. And the third thing you've got, which is not that influential, I would say, but it is a little bit, which is China trade numbers. So we're going to talk about that, all of that economic calendar. And Apple fell down 4.58% on the last trading session, which was Friday. That was amazing. If you see the technical chart, which we're going to look at, obviously, the trend line is broken, long-term trend line, and the stock opened, I think, yeah, it opened gap down and went down, I think, 3% after that. Will it fill the gap? We're going to talk about that. Nasdaq is dumping as well, tumbling since the US downgrade news, which wasn't very important, as Tone said, but at the same time, there has to be some reaction from the markets. We're going to talk about Bitcoin. Bitcoin, technically, weekly time frame, the Bollinger Band is tightest right now. It's the most tight ever. So that is really, really important. But I'll quickly do the introduction. I can see people joining. We're going to give like 2 or 3 minutes more for our listeners to join, and then we'll begin the spaces. I'm quickly going to see if I missed something here. All right. So, guys, Financial Summit, right? As Chad mentioned, it is one of the best events. Why? Because spaces and all is good, but meeting people in person, IRL, is amazing. You network, you meet professionals, you meet traders, entrepreneurs. And last time in Bali, we had so much fun. It was amazing. This time it's in Dubai, 5th until 10th November. You've got to check out the website. In the nest as well, you've got the pinned tweet, which is a video, the promo video on how it looks, how was the last time. So go check it out. Other than that, do make sure that you give a follow to this account. Why? Because we're providing you with the best research from the best tools possible, including Bloomberg Terminal as well. So that's amazing, right? You're getting it for free. You're getting spaces twice a week where we are preparing for the markets. So yeah, check it out and hope you enjoy the space. That's one of the most important things. I'm quickly gonna put some of the tweets in the nest so that we can talk about them, Tone, and you can just shout out when you're ready.
Yeah, I'm good to go. Tweet is out.
Perfect.
Hopefully, Joe Colasari or Dr. Jeff Ross would join us, but we'll see.
I saw Dr. Jeff Ross's screens today. Few screens in front of him. Posted a picture on Twitter. That was amazing. All right, so we'll begin with China trade balance numbers, Tone. This is one of the most important ones, I believe, for the US dollar as well as the yen. Yuan, why? Because you see how many imports, what is the import versus export number for China, and China is living on that, right? They're living on that, so you've got to make sure China has to make sure it's a positive number, it's a green number. You can see in the pinned in the nest as well, the first tweet in the nest, which shows what has been the number in previous couple of months. So, Tone, do you think this is an important number though? Have you ever traded it or looked at it?
Right. So I have not. I actually have not really paid attention to China's trade balance number. I usually look at it from like a year end perspective, and China usually sells, exports a lot more goods than they import. So they tend to have a positive trade balance. It's interesting how the last 2 months has been in the red, which is a little bit surprising. Of course, when the numbers are in the green, they're way higher in the green. I'm not exactly sure why these numbers are not like consistent. I mean, they seem to be hovering around 100 billion in one direction or the other. Look, as I've stated many times before, I never claim to be an expert on China. And most of the stuff that I say about China tends to revolve around the fact that I don't really know what's going on over there. And I don't think anyone else does either. including people that are very, very close to China, because it's just such a massive country, like massive in terms of the amount of people. It doesn't, and the territory is somewhat big, so it's a little different. Like Russia is not a big country, even though it has a lot of territory. It only has 160 million
Your
people.
network is not stable, Tone. Is it only for me, guys, or for everyone else as well?
Okay.
How can someone else hear me? How was it?
It's actually perfect. There's no
I
problem.
could hear you
Tones.
perfectly. Yeah.
Okay, so I'll just keep going. So it looks like the problem is not on my end, and so like Russia is a large country in terms of territory, but it's not a large country in terms of people. There's really only like two really major cities, and a country like Japan, on the other hand, has a lot of people, but it's a very, very small country. So things that are happening on one end of the country are kind of known to what's happening on the other end. Even though it has a lot of people, it has a small territory. But China is one of those places that has a sufficiently large territory and a ridiculously large amount of people. It's kind of similar to India, I would think, where stuff that's happening in the south could feel like a completely different country than what's happening up in the north, just because of the sheer number of people, and the country is somewhat large. Brazil is very, very similar. Like the people on one side of Brazil look nothing like the people on the other side of Brazil. And that's why China is very, very difficult to figure out. I don't really look at these kinds of numbers often. I would love to get like a China expert one of these days on the show, and I would still be skeptical of their expertise. I just think that eventually, when China becomes the financial capital of the world, it will be forced to have a lot more transparency, and then we will know what's really happening under the hood of China, because China will not be the financial capital of the world if the rest of the world doesn't have confidence in their transparency. And until there is some more transparency, it will not become the financial capital of the world, and the collapse of the U.S. will just continue to be delayed. One of the things that's going to prevent China from becoming the financial capital of the world is their continued control of the Chinese yuan, which is actually two different currencies. Because one is internal and one is external. You can't have that. If China does want to take the reign from the United States and be top financial superpower, like the UK was before the US and Amsterdam before the UK, China will need a lot more transparency. I don't know if the world's going to go into that direction. Maybe there won't not be a need for China to have a clean, transparent currency, because Bitcoin will become the currency, right? So it all depends on time. If China wants to completely float their Chinese currency, make it super transparent next year, they would probably be that financial capital of the world within the next 5 to 7 years, taking the reins from the US. But if they continue to be this black box, which they're okay being, and they delay this another decade, they may not get a chance to take over from the US dollar, because Bitcoin will then be sufficiently large enough market cap, enough people will be using it, where Bitcoin could become that dominant currency, and then there will not be a single financial capital of the world. Things are going to be a little more decentralized. I would like to see the latter, where it's Bitcoin, but I think that in reality, it's probably going to be China. They will open up. They will be more transparent with their financial system as the U.S. continues to deteriorate. There's a lot of additional factors involved here. Like when I did say 10 years, in reality, Bitcoin needs closer to 13 to 15. So China does have time to create a lot of transparent policies in their financial system in order to attract international capital and international trust in their financial system.
Apparently, some technical issues are here. So from the host side, so until he fixes it, I'll take over. I'm sorry I missed a bit of that insight that you shared on China, and forgive me for the voice. I'm kind of running to a system. But you mentioned that they have to create transparency. So, but do you think that they will be willing to do that, because they've always operated in this kind of closed environment where they can create policies and control conglomerates in a way. And if they would like to like switch this narrative to be an open market, would yeah, sorry, you were saying.
Yeah. No, that's a good question. And I don't know. The answer to that is I don't know. Xi looks like he's going to be president for a while, similar to how Putin has been president for a while. And I don't know if they are interested in that, right? Because being the world superpower or being the financial capital of the world does come with its own problems. The U.S. Federal Reserve is the central bank for the entire world. Look at the issues the United States is facing. China may not be interested in that. Again, for some reason, people think that Russia is out there trying to capture all of Europe. And for some reason, people think that China wants to capture everything, but that's not true. China and Russia have historically been countries that were more defensive, and they were more protecting their own, which is how the Chinese wall was created. And if you look at the Kremlin, it's like a giant fortress because it was initially built to protect them from, another Mongol invasion. And same thing with the Chinese. They're not really out there trying to conquer the world, contrary to the American propaganda. Now, when what was I saying? Sorry, I got distracted here for a bit. So now when people are talking about how China is going to take over Taiwan and China is going to take over Hong Kong, but these are traditional, Chinese territories, right? It's not like they're going out there and trying to conquer Thailand or Myanmar or Vietnam. Now, they might be forced to do that depending how the United States approaches their China policy, just like what Russia is doing with Ukraine, which is something that they weren't really interested in doing. And if they have to, they will march all the way to the border and potentially this war could cross the border. But that wasn't the initial interest, contrary to the American propaganda. So as far as China's concerned, I don't know what their future plans are, but in about 2 years, we should have a much better idea of which direction they're going to take their financial system.
That actually makes a lot of sense for me. But just to put a caveat on this, do you think, and we can end on this one, do you think that with creating this new currency, in a way currency, the BRICS, this whole charade of kind of working on their own, do you think that China is under the impression that they don't really need others to be like investing in them and seeing them as a, how should I put it, as like, do you think that they are in a position that they think that they don't really need any other outside investors to come in and they can just function on their own and eventually be the superpower they are willing to be?
Well, look, most people and most countries are interested in external investment. The thing is, with China is still having a lot of issues managing their own internal affairs. China is growing so quickly. So many people, so many Chinese are, getting out of poverty. They're getting out of, the rural areas and coming into the cities. China is doing everything they can to kind of keep it all together because of this enormous population. So trying to take on too much right now could basically create issues where they could struggle to maintain their internal balance. So that is why they may not be very eager to try to become the financial capital of the world right now. They may be pushed into that direction if something happens to the US dollar. But I don't think they're in a rush to force the collapse of the US dollar, if that makes sense. And I'll comment on one more thing on that regard, is that this BRICS gold currency, I mean, I'll believe it when I see it. India is not exactly thrilled on this. I mean, India and China are having their issues. none of these countries want to give up the control of their own currencies. And I think most of them would rather just trade with each other in their own currencies as long as their currencies remain stable. But it's a little bit challenging for their currencies to remain stable when everything is measured against the dollar, and the United States is still in a very strong economic position to, how can I state this politically? They're in a position to still fuck with other countries' currencies, the way they've been doing with Russia, and they can't really do it to China because China has is such a huge financial colossus that they can control their own currency. But the United States can still screw up the Indian rupee, which is why I think the Indian rupee has been devaluing a bit. I'm still confused what the hell is going on in Turkey. And South Africa, as I've stated many times, is a bit of a basket case. I would love for Chad to comment on South Africa because he is South African and he does business in South Africa. I kind of was very critical of South Africa in a space about 3 weeks ago, and a couple of South Africans got really, really upset at me. But I would love to talk about South Africa some more. I mean, they're contributing almost nothing to the BRICS, and I wonder if the BRICS. I mean, it's kind of nice for the BRICS to have a member from the African continent as part of that economic alliance. But I think if they can replace South Africa with maybe Nigeria, they would be very interested in that, even though, speaking of corruption, Nigeria ain't great. But at least I think Nigeria is trending in the right direction. Nigeria is, however, a little bit pro-West at the moment. And this thing with Niger is about to, well, let's see where that goes, right? Because if Niger does not end up in a war, that could be a pretty damn good member of the BRICS because of all the uranium that they're mining over there. So that would be very, very interesting. That is something to watch on a geopolitical scale and how it's going to affect
Am I audible here? I
lots
think
of economies.
I lost tone.
Oh,
I could hear him.
we're really having some struggles in spaces. I mean, I can moderate, but I can't really ask myself questions. So if I see Big Chonas is in the audience as well,
I
we can bring.
I can hear you, Tone. I can,
Okay,
yeah, I
good.
can hear you. Perfect. So I tried to rejoin from the other phone. Apparently, it's good that we didn't lose the spaces, which is good. So I'm gonna bring Aman back as a speaker. I'm not sure what's happening with the spaces. I think it's an issue
Yeah,
overall.
suddenly it drops
But
somehow. But yeah, I mean, coming back on the China topic, I just hope it works again. I actually agree with you because the way you mentioned that we kind of believe it when we see it. I, coming from India myself, and the criticism I would hold is that India itself doesn't really want to leave the narrative of controlling their currency, because just last month they implied some 20% taxes on any foreign investments that Indian residents put. So, I mean, with these kind of things, I don't really see how outside investors and even investors in India are willing to transact abroad in way of investments. I mean, that those limitations actually hinder the trust in big money, in my opinion. So even, I mean, coming from India, I can, I think I'm okay to criticize that. But just to check that everything is working fine and everybody can hear me, I can move on to the next topic.
Yeah, there's a big BRICS event. I think it's a BRICS event coming up in South Africa, and they have a bit of a problem because South Africa, for some dumb reason, agreed to the ICC's criminal warrant on Vladimir Putin. So now Putin can come to South Africa for a risk that he might get arrested, and he's probably saving the entire world by not going to South Africa, because if Putin gets arrested, we're all pretty much dead. That's the stupidity of the ICC and the International Court that Russia is not even a part of. So this was like, the court's completely useless. You might as well just shut it down because it's not even following its own rules. And so Putin's not going to go. So if Putin's not going to go, India doesn't want to go because India doesn't want to probably be head to head with China without Putin there. So this meeting is kind of falling apart. South Africa has not really been much of a contributor to the BRICS. Brazil is holding their own economically pretty well. India, China, Russia is surviving pretty damn well considering what they're been going through for the last year and a half. A lot of it of their own doing, but mostly America's doing. and South Africa is just kind of like just there. And this meeting is not going to go very well. But let's see what happens at the next meeting.
Yep. And all right. So, I also heard that there is another BRICS thing. So, which is basically that you're not gonna have US dollar
Am I
as the
audible here?
currency. Yeah, you are, Aman. Yeah, yeah. And we're gonna move to the next topic, which is CPI. CPI is coming, which is one of the most important numbers again. And what we are looking at is a number below the previous one or the forecast. The previous was 3%. It's been in the nest as well, the first tweet. The forecast this time is 3.3%. In the last, how many? In the last five numbers, CPI numbers year on year, we got a better number every month. So starting from February, if you look at the tweet, December actually, we had a 7.1 number. Since then, we went down from 6.5, 6.4, 6.5, 4.94, and now at 3%. So this was a sharp decline from 4 to 3%. And now, what is the Fed's target? Fed's target is 2%, which is simple, but it's going to take some time for them to reach there, obviously, because now it's going to become more difficult to bring the number down. That's what I believe, because the less number it is, the less chance of it more falling. That's what I'm thinking. But what do you think, Don? What do you think? How this number can impact this time? Because we've been seeing a declining number from past 7 months now.
Yeah, I think as long as that number stays at 3% or even dips down to say 2.9, which I believe that it could, if that number dips down a bit, I think everything is okay. The Fed does want to raise the rate one more time. So a larger number like 3.2, 3.3 is really not a big deal. The Fed does want to raise the rate. I think they will pause this upcoming meeting. There will be two CPI numbers before the next Fed announcement of the interest rate. So this one, what's the projection? You said the projection is 3.3?
3.3 this time, yeah.
3.3 is anticipated. What was last month? Was it 3.1?
The last number came out at 3%, and the last forecast was 3.1%.
Aha, last
I mean,
forecast
they
was
are forecasting more
3.1.
this time.
Okay, so this
Yeah.
is good. I mean, they're forecasting more. It'll probably come in a bit light. It'll probably come in at 3.2 or 3.1, and everyone's going to be happy that inflation is not very high, and the Fed's going to be happy that they don't have to raise the rate right now, but they will probably raise it again if it comes in at above 3% for 2 months in a row. They are going to raise it one more time. Look, inflation being
You really
3%.
believe there's going to be another
Rate hike? Yes. I believe there will be one more rate hike. Yeah, there will be one more rate hike to 5.5. And that could be it for the year. And then we'll see. But look, the US government has been trying to create 2% inflation for a decade, and they were not achieving it. Now, inflation is 3%. It's not a big deal. Whether inflation is 3% or 2%, it doesn't actually affect the average person on the street. It really, really doesn't. Assuming these numbers are accurate, assuming these numbers are real, things going up by 3% in price from year over year is not a big deal. Every single person can somewhat afford that and manage that. It's really the expectation. And yes, I know this thing is, I know it's not real. I know reality, certain things are going up in price a lot more. But as I've stated many times, the problem with higher prices is the supply chain, is the disruption of the supply chain. Started with COVID and then continued through through the sanctions with Russia and the disruption of cheap energy, the blowing up of the pipeline. Now with what's happening in Nigeria is going to affect it as well. Everything has a ripple effect because now that France cannot import cheap uranium, they're going to have a problem maintaining all of the nuclear reactors, because unlike Germany, which used to run on Russian gas, now Germany's screwed. It's very, very difficult to keep manufacturing in Germany because your gas prices, your energy costs have tripled. Now, France was able to survive on very, very cheap energy because France mostly runs on nuclear power with cheap uranium out of Nigeria. Now that gravy train is over, so it might be very, very expensive all of a sudden in France to have energy. So the prices on everything is going to go up for French industry. I'm not sure exactly. I'm not sure what the big manufacturing over in France is, but I mean, we all know about French wine and the competitor to Boeing. What was that? Airbus. Airbus is a French company. I mean, there are some big French companies, and all of those expenses are going to go up. And you're witnessing European countries one by one having their issues. Italy and some other countries are having big issues with migrants. Not that other countries don't. So all of these countries are having their own issues. That means that the costs are rising on all of their goods, and that ripples through the rest of the West because Russia is not trading with America. And if America keeps pissing off China, China might stop trading with America. And now America will have to buy some more stuff from other places, including Europe, and the prices on that are going up. So the cause of this inflation is more the supply chain than all the money printing that happened. And if in reality things are only going up in price by 3%, I don't think that's a big deal. So I think it'll all be okay.
But in just, let me just confirm that everybody can hear me again.
Yes.
Yeah. So in that regard, I mean, coming back to the CPI print, what do you think will be the retail investors' impulsive reaction seeing that? I mean, let's assume that there could be a slight rise, let's just say there could be a 3.2, 3.3 number, a bit higher than what expected. What do you think will be the impulsive reaction of the investors in the market?
Well, I will say that if the number comes in, if the number is within 0.1% of expectation, I don't think anything significant is going to happen. Now, if the number deviates by 0.2% from the expectation, so let's say inflation comes in at 3.5%, I think people are going to panic a little bit. I think that would definitely cause a bit of a drop in the market for two reasons. One, they're going to feel that the Fed is going to raise the rate. And two, they're going to, be concerned for the consumer. And people are conditioned at this point to panic if inflation comes in a bit high. Now, in reality, that's misguided. I think that if inflation comes in a bit high, that doesn't mean you should be selling the market. If inflation's coming in high, that means companies like Apple are charging more money for the iPhone. And I'm an Android user, and I just saw the new Google phone came out that's like totally foldable, and the thing is like $1,700, and I'm like, oh man, I want that. Google has never had a phone this expensive, right? Google phones are usually under 1,000. This one is coming in at 1,700, and I'm like, shit. Wish Bitcoin was higher, maybe I'd buy that. But so at first, people are going to panic. But then they're going to realize that, wait a minute, if inflation is still high, then maybe all of these stocks are a bit undervalued because they're going to charge a little bit more money. And we know salaries aren't rising. So they're going to save money on salaries because there is, plenty of, unemployment is not really an issue. So I think stocks are still going to end up rising after a short panic. Now, if inflation comes in low, if inflation comes in at, say, 3%, then people are going to be happy that inflation is not rising, and the Fed is probably not going to raise the rate, and the economy is getting back on track, so people are going to be bullish as well. So I think that either the stock market rises on the news, or it short-term falls and then rises then after when people realize that this is not actually bad for the markets.
That actually makes a lot of sense. This is something that I've been preaching a lot myself because, I mean, if there is an increase in inflation, it's either triggered from increasing revenues of the companies because they're charging more, or there could be a ripple effect and there could be companies that will charge more eventually, will rise the revenue and will be overpriced in the stock market. But yeah, let's come back. Let's switch it somewhere to something more interesting, and I think that's oil. Sorry. So we have a OPEC report
Oh,
coming up.
one second. Before you go on to oil, I just want to do a shout out to FA and also Deer Point, two people who I've, FA attends the financial summits. I see Deer Point has bounced. Would have been nice to get him on stage, but oh well. But FA, if you want to come up, say a few words on what's going on over in Turkey, happy to hear it.
Yep, guys, it's an open space. People are welcome here on the space. I can see KP as well in this. Listeners, thank you for joining. Anybody who has anything, please come up on the stage. It will be lovely to hear from you all. And people who don't know Financial Summit, I'll just give you context. It's an open event. It's a luxury event happening in Dubai this year, 5th until 10th November. We discuss everything. We meet everyone, businesses, entrepreneurs, traders, hedge fund managers, all of them under one roof for 5 days, and we discuss everything. It's a fun experience. I think you should check the website if you haven't yet. Coming back, let's switch on to oil. Tone, you've been covering this a lot, and I think finally it's time to see. I think we've been seeing price action already. It's like 16% up in the last 5 weeks, and ever since you've called it. But with this report coming up on Wednesday from the OPEC, what do you think lies ahead for the oil?
Yeah, looking forward to hear what the OPEC report is going to say. But lots of news on the oil front. More and more people are starting to realize how important the Strategic Petroleum Reserve is and how critical it is. And news broke earlier this week that there is lots of speculation that the oil that was sold out of the Strategic Petroleum Reserve was sold to China, which is in a way kind of crazy if you think about it, but also, well, from the American perspective, well, if America doesn't sell oil to China, and China is going to buy that oil from Russia, it will strengthen ties between Russia and China, and it will provide Russia with more money. And right now, the number one goal of the United States is to destroy Russia. So if the United States has been depleting the U.S. Strategic Petroleum Reserve to China, I think that is very, very bad and an impeachable offense for the Biden administration, because I tend to value the Strategic Petroleum Reserve very, very highly, contrary to most American economists. And they also announced this past week that they are not going to replenish the Strategic Petroleum Reserve because the price has gone up a little too much. So now, in order for them to drop the price of oil, they would need to once again deplete the Strategic Petroleum Reserve. Eventually, the Strategic Petroleum Reserve is just going to run out of oil. This is looking very, very bad for the Biden administration. It's a complete disaster. I have no idea how they would fix it. If I was in the administration, I don't know how I would fix it. They are completely screwed. All they can do is censor the topic and try not to allow the mainstream media to talk about it. But I do believe that they are going to deplete the Strategic Petroleum Reserve a lot more between now and the election. I think they're doing everything they can not to deplete right now, because they don't care if the price of oil goes to $100 right now. The election is not till next year. But if they run up the price of oil to $100 a barrel, and then they start depleting it next year, they can then, Biden is not going to debate anybody, but the Democrats can just go and say, see, look what we did. We've dropped your price at the gas tank from $6 down to $4.50 by depleting the rest of the Strategic Petroleum Reserve next year. So I think they're holding out on selling any more for now. But if the price of oil starts to reach triple digits, they will not have a choice.
Yep, that makes sense. That's another thing we saw from Bidenomics and how it's taking events in turns. But in terms of, just for the context for the people who are new and they don't really know much about strategic petroleum reserves. Sorry, what's the what's the average that how should I say? I'm sorry, I'm a bit confused. What's the average monthly rate of using them, and how much should we have in a buffer so that we don't really fall in that critical condition where we can be in trouble? And just
Sure. So the Strategic Petroleum Reserve, it started in the early 80s after the whole oil, disaster in the 1970s with all the issues in the Middle East back then. So the United States decided, hey, we need to have a buffer and we need to store a bunch of oil. So there were all these facilities made. The biggest one is down in Louisiana. And from the 1980s, over the next 20 years, the United States was adding more and more oil to the Strategic Petroleum Reserve, where at its height, it held 750 million barrels. That was I'm sure it can hold a little bit more. You can probably go up to 1 billion barrels in total. But at one point, the United States had 750 million barrels. And it's really meant to be used for two purposes. One is in times of a natural disaster or a disruption in American oil supply. Like, for example, a big hurricane hits Texas and suddenly all of the oil rigs in Texas are not functioning very well. And you can tap the Strategic Petroleum Reserve short term in order to for the gas prices to stay kind of constant after a natural disaster. Or even if a hurricane comes to Florida and a lot more energy is needed in Florida at a time where, they're devastated and they can't really afford to buy extra. So the government would provide that oil to a disaster zone at a cheaper price, tapping the Strategic Petroleum Reserve. Another reason why it's created is in time of, let's say, war, where suddenly the United States has to use a lot more energy at a time where they can't really afford higher prices. And it creates, what if there is, if the United States is in a war and they can't get any ships in, like if the United States is buying oil from Saudi Arabia, how do you get that oil into America? Well, you get it by ship. But what if the water is blocked by the Chinese or the Russians, and suddenly America can't import the oil from Saudi Arabia? Now, what do you do? So this is what the Strategic Petroleum Reserve was meant for. Now, the Biden administration started using the Strategic Petroleum Reserve for political and election purposes, to where they depleted half the entire supply of the reserve over the last 3 years. So in the midterm election year, which was last year, 2022, in that year alone, the Biden administration sold 225 million barrels. That is pretty much 25% of the entire Strategic Petroleum Reserve, something that took a decade or more to fill. They depleted it in basically 1 year. And there was a Senate hearing about it. And there were two people that were saying how basically treasonous it is to use the Strategic Petroleum Reserve for political purposes. And one of the people is saying that no, gas prices at the pump is a national emergency, and the Biden administration had to reduce the price of oil of gas at the pump in the year 2022 after everyone was devastated with COVID and all this other stuff. So they also depleted it for, I think, 45 to 50 million barrels in Biden's first year, and they are on pace to about 40 million barrels this year. So in my correlation analysis that I've been looking at it every week, on weeks where the oil price fell, the Biden administration sold over 1,500 barrels of oil. By only selling 500 barrels or less, oil prices on average were rising that week. So the Biden administration needs to sell approximately 1 million barrels of oil in order to keep the oil prices constant. and the entire petroleum reserve is now down to approximately 250 million barrels. I can get the exact number. I do track it on spreadsheets, and I do show these spreadsheets whenever I do videos on the YouTube channel. I'm going to look at it right now, and the current amount in the reserve is 346 million barrels. So the entire reserve is 50%. Biden has spent 2.5 years in office, and in total, he has depleted the reserve by 43% in his 2.5 years while in office. As a comparison, in Trump's last year, Trump actually slightly increased the amount of oil in the petroleum reserve in Trump's final year in office, which was an election year for Trump. And he still added to the petroleum reserve. He didn't add anything of significance. He only added 3 million barrels, but at least it was an addition. It wasn't a subtraction.
I have to say this is some insight that we as normal, like I would say, yeah, me as a normal person would just let slide by and maybe sometimes not connect the dots, and that's why I love being on these spaces, and I'm sure a lot of our listeners as well. I guess the host is back with his mic.
Yes, guys. Finally,
Great.
finally, I can hear you all, and I really have a lot to talk about. And let's go, let's go. All right. So, guys, we heard a lot about what's happening with the economic calendar. Obviously, we've got the China trade numbers, and how do we prepare for that? So, if the number comes more than expected, then that is bullish for the Chinese yuan, the Chinese currency, and whereas it's going to be bearish for the US dollar. So, that's a prep. That's a prep. You should definitely look at the number. You can backtest it as well if you know how to trade that number. Maybe if you want to trade it, not asking anyone to trade though. But CPI is coming on Thursday, which is very, very important. We just saw that the forecast this month is 3 for year on year, and what's going to come, let's see. Last time it was 3% as well, but the forecast last time was 3.1. Sorry, the forecast this time is 3.3%. Just checking the number again. That is another thing. And then you've got the OPEC monthly report, which Tone is talking about. It would be great, Tone, if you can, if we can send out this report in the YouTube as well for the spaces. So, guys, what we are doing is we are putting these spaces on YouTube as well. If you miss these spaces, you don't want to listen to it, you can go to YouTube. You've got all the pinned tweets as well over there. You can see the visuals, and you can see what everyone is talking about. So that is economic calendar for us. Now we've got three more topics. So firstly, we'll go towards Bitcoin, and then we'll move towards equity. So we've got Bernoulli here as well. Bitcoin right now. I've got a tweet. I've got a tweet from Cheds, and Cheds is a CMT level one, and he understands technical analysis like really, really good. So he just said today that BTC weekly Bollinger Band's tightest in the history, remarkable price compression. Now, this means that the volatility is really, really low. And what Bollinger Bands teach us is what John Bollinger has said is that whenever there is a point of low volatility, that means that high volatility is just around the corner. So I'm gonna let Bernoulli, go here first and talk about what is happening with the volatility and behind miners as well. Because Tone was mentioning that, miners have to sell. So go on, guys.
Real quick, when you're talking about Bollinger Bands, what time frame are you looking at?
Weekly.
Gotcha. Okay. Yeah, and the question for Bernoulli, hearing lots of rumors through the grapevines that miners are selling more coins than they have in recent months. And my speculation is they held out as long as they could, and bills are due, and hash rate ain't dropping. So, what's your view on all that?
Yeah, I think that's pretty accurate. The hash rate has just continued to go up, and thus the difficulty keeps going up. So if you're not adding hash rate to your mine, then you're making less Bitcoin. And the price of Bitcoin isn't exactly going up, though we are up from the lows. I think that the vast majority of coins that are being sold on the market are coming on a daily basis from miners to cover costs, especially electricity. And yeah, I've noticed the Bollinger Bands also. I've seen a few people point out that they are about the tightest they've ever been on the weekly time frame. And it does seem like we are due for some volatility. I think personally, I lean a little bearish on that. I think we could see some volatility to the downside and then perhaps back up shortly after. But, I'm not expecting new lows, below 16,000 or anything like that.
Are you saying that the volatility will be towards the downside because of the equities or because of the mining situation or just technical analysis?
Most of that in my case just comes from prior Bitcoin cycles and what usually happens in the last 6 to 12 months before the halving. There usually is a shakeout to the downside. But it's weird right now because it might look a lot more like 2015 time frame than the prior cycle. But there still was a shakeout down a pretty large percentage there, um, toward the in the last several months before the halving. But it's pretty neutral on which direction it could go. I just lean very slightly bearish in the short to medium term.
Yeah, and we were discussing about this, Tone, if you remember in the last spaces as well, that there can be a shakeout if you look at the prior cycles, then this bull market shouldn't be this easy by letting just people enjoy this 16K move until 25K, giving a throwback and then moving up towards 30 and then 34. So, but Noli, we were discussing about the shakeout. Do you think that you are saying that you're more inclined towards the shakeout right now from let's say 30K, 32K until 25 or maybe 20 or 19K? Or do you think the shakeout can also come after like 40,000 when we come back down towards 32 or 25? What do you think? You're more inclined towards the first one, is it?
Um, I think I'm more inclined toward the first one, but I think we did make a new swing high. It just doesn't look very bullish to me at this time, but it wouldn't surprise me at all if we went up. We had some volatility to the upside before a shakeout. I'm pretty much 50-50 on that.
That makes sense. So we also saw that VIX was at the lowest levels, and suddenly what happened was the downgrade news came in, and after that VIX jumped I think 35%, which is amazing, which is great. And what happened to Nasdaq? What happened to S&P? We all know, right? It started to fall. The indices, the stock market, the big stocks. So, Tone, are you looking for such an event in crypto markets as well, where we can see a news which will drive in or pump in the volatility soon?
I'm really not. I'm not looking for a huge capitulation event in Bitcoin. Look, anything can happen. Like Binance Exchange can go the way of FTX. But I think that there's so little liquidity on these exchanges that it would immediately be bought up. So for me, I am looking at the charts. I do see the long-term weekly moving average is sitting down at 27,000. And I think that that is the ultimate low. I don't even think we're going to go to 27. For me, 28,000, maybe spending half a day below 28, is for me, like at the moment, the worst case scenario. I'm not scared of this consolidation. I think this consolidation is still hurting people. And I just have a less bullish view for the next 12 months. And that's going to be a correction through time, not through price. I just think that this bear market has been very unique. It has a few similarities to other bear markets, but it has its own spin on it. And I think the ultimate, I guess, the biggest frustration of this current bear market is not going to be a price low. It's going to be the continued consolidation and a delayed breakout. Like I can actually envision a situation where 50,000 is not broken until like 2025, like an entire 9 months after the halving, and people are still frustrated how the price of Bitcoin has not gone up above 50K. So I see it more of a time struggle than a price struggle.
That makes sense. So yeah, I mean, and that is what Bitcoin is doing. Currently, the weekly Bollinger Band is tightest, and it's basically testing people's patience, which is true. But there is a news coming in, guys. If you remember, Tone, we were talking about this. We had Willy Woo's thread about Huobi Exchange, and you said that we do not have much data, and he mentioned that there is a threat over there, which is happening in the exchange. The reserves are falling at a great level, and right now, I'm looking into it, and there is literally a potential insolvency happening. This can be a big, big news. So, what is happening right now is I'm looking at DeFi Llama, and the USDT reserves are declining on Huobi Exchange like crazy. Right now, we are at 2.5, and when we were talking about it, the graph is literally opening in front of me. When Willy Woo had his thread on, it was around 3 billion. So, do you think that this is big and this can be, something to notice now?
I don't think so. Like, I don't think Huobi Exchange was big. I remember back in the day when Huobi was like one of the big three exchanges. It was Huobi, OKCoin, and BTC China. I BTC China's gone. OKCoin is kind of still around. Huobi is kind of still around, but I never trusted their volumes. Not in 2014, not in 2015, and certainly not today. So when Huobi's volume dropped, it probably went from fake to real. And I don't think Huobi ever posed any kind of significant threat to Bitcoin. If Huobi Exchange disappears tomorrow, I don't think anyone would care. At least not anybody in the West.
Yeah, that is 100% true. So we were talking about this in the previous spaces that, Binance is doing more than 90 million of business in China, and China has Bitcoin and cryptocurrencies banned. So what is happening over there is something dodgy happening over there. So Huobi Exchange has 60% volume in China, and it's not very famous in West, obviously, as you mentioned. But still, looking at the situation, retail can look at any news and it can make I think a big thing out of that news, and sometimes they don't even care. The markets don't even care about the big news. Sometimes a small news becomes a big event. But from 30th June, USDT reserves are declining from 600 million to just 64.52 million on 6th of August. So that's 1 week, and that is what is happening with Huobi Exchange. If we look at Ethereum, the total reserves have been decreasing since 2020 and have reached multi-year low levels last year. So I'm pretty sure that if 60% of the volume of Huobi is in China, and Binance is doing good business as per inside documents. I'm not sure how much it is correct. As you mentioned, we don't know about it. But if Huobi goes down, then Binance has a good chance to take over that geographical location. And for sure, we know this, Tone. We have seen this in the previous bull markets as well, that China bans and unbans crypto more than anything. So do you think this is a chance for Binance to take over?
No, it definitely is a chance for Binance to take over, but I'm more concerned about Binance going the way of FTX than I am about Huobi going the way of FTX. And if China does take over whatever Huobi's market it is, it doesn't actually lower the risk of people that are currently with Huobi. They're just moving that risk over to Binance, which is equal to the risk as Huobi. Quick shout out to Chart Vampire, someone I've known for a long time. Attended the original Unconfiscatable and even played in a tournament. I shot you a speaker invite. If you want to come up, don't want to dox your real name. Don't know if you want people to know your real name. But yeah, Char Vampire, I saw a bunch of your messages to me about the economy and stuff. You have a pretty good grasp on it. If you wanted to throw in some comments, you would be welcome.
Yeah, you were mentioning about Binance, Tone. So do you think so? You're saying that Binance is more like FTX if that happens, but it's way too bigger, right, than FTX, obviously.
Yeah, Binance is way more than FTX. Hey, can one of you guys like DM Chart Vampire and help him accept a speaker invite and to come up while I'm speaking?
Okay, yeah,
Thanks.
sure, I'll do that. I'll do that. Yeah.
All right. I think the risks are pretty heavy. I mean, Binance, I've never trusted Binance. And if someone asked me a year ago, Tone, which exchange do you think is safer, Binance or FTX? I would have said FTX. Now, I would have been proven wrong at the end of last year when FTX turned out to be completely fraudulent. But I never trusted Binance. So I would still be very, very careful for anyone that's holding money in Binance.
I've sent a request to Chart Vampire. I've DM'd you as well, Chart Vampire, if you're looking at it. You should have got a notification on top of your screen. Yep, I think you're a
Oh,
speaker
look at
now.
this. I'm
Yep,
in.
yep. Oh, perfect, man. That was good. Quick as
Hey,
well.
Tone.
Hey, how are you doing,
Hey,
mate?
Tone. How you guys doing? It's been a minute.
I'm sure he'll figure it out.
Yeah.
All
Can you hear me?
right. Hey, we got you, man. We got you.
There we go. Yeah. I think it's my internet connection, maybe. It looks like I got full bar. Yeah.
Am I calling you by your real name or no?
Yeah, it doesn't matter. That's fine.
All right. Thanks for joining, Chris.
Hey, buddy. How you doing? Yeah, I just sent you a huge breakdown on the internet. I DM'd you a huge breakdown on what I thought was going on with the economy. Kind of my foresight of what's coming up.
Yeah, well, why don't you go ahead and give us a summary of those 4 points?
Yeah, so, one of the things is we've been really watching for my industry. One of my industries that I'm in, we actually own a bunch of nightclubs and bars all over the country. This is in the United States, of course, and this is one of the sin industries. So, we're pretty well insulated against recessions, and we actually have a pretty good pulse of what's going on with lower and middle America. And we can see as the trends, we track our trends really closely of the spends of our customers, how they're spending money, how they're using their credit cards versus cash. And one of the big things we do is we actually really closely track the spending patterns to determine where we're at in a cycle. And as everybody knows, there's one of the things about the bar industry is when times are good, people drink a lot. And when times are bad, people drink a lot. So, this is one of the kind of insulated industries. We also have been watching credit card declines. And what we've been seeing is more and more credit cards are getting declined as we've progressed, especially over this last 2 quarters. So watching those credit card declines come in at a higher frequency shows us that people are really limiting out on their credit card transactions, and that I don't know if anybody saw that report the other day that was released, but banks are all cutting people's credit card limits. Interest rates have gone absolutely through the roof on credit cards. I'm pretty sure everybody's aware that we're way over 2019's credit card debt. I think we're in the trillions, 1 point something trillion, or was it $2.18 trillion in credit card debt? It was a lot. So we've been really tracking the economy. And one thing that we're doing is we're actually looking at getting into a kind of a side hustle where we're actually looking at opening up a jewelry store that buys gold and basically high-end watches, stuff like that, stuff that the middle and lower class has really just been sucking up for the last couple of years. We have a lot of really good connections in the designer industry all over. We're talking any of the ADs and Patek Philippe, Audemars Piguet, Rolex, and we're talking ADs all over the entire world. I have good friends in Spain. We just got back from Monaco, Italy, talking to everybody over there. We were in Paris for a couple days, and I just, you can see the incomes dry up of the lower and middle class because, the demand for high-end goods has just been, it's fallen off a cliff, absolutely fallen off a cliff. And you can see that there's no more lines. I don't know anybody last time somebody's been to a shopping mall lately and walked by a Louis Vuitton. So you hear from the Biden administration that the economy is doing great and everybody's doing great, but then you go out into the streets and you actually see the reality of what's happening. And you see the reality that people are hurting. that people are financially strapped and they're just not spending like they were. And it isn't because of fear, right? This is one thing I always try to explain to people about recessions and lower income people, poor people, right? Recessions don't affect lower income people. They were poor before the recession, they're poor during the recession, and they're going to be poor after the recession. So for, those are not the clientele that you see that ever tighten up their belt. They just keep running through a recession. They run through the good times, run for the bad times, doesn't matter. They never stop running. It's the middle class right now that we see is starting to take that real hit. Car repos here in the United States have gone from 17 to 20,000 vehicles a day are getting repoed. So you see, we're kind of almost at the top of this like ledge, and I feel it's just something hasn't been able to push us over. If you look at the inverted yield curve, right? We're at 12 months. Longest it's ever gone is 16 months, 17 months before recessions kicked in. And here we are, we're sitting at 12 months. I in the message I sent to Tone, the problem is there's just no catalyst like we had in 2008 with the housing crisis, in 2001 with the dot-com bubble. If you go back, there's something that triggered. I think it was 87 was the fuel. Gas prices went through the roof. So there was a triggering event every single time that's pushed the economy into recession. And I can't see anything other than a collapse of a major economies defaulting on their debt. We see, if you guys have looked at Vietnam lately, look at Vietnam. The housing market bubble just popped. Housing is down 50% right now. There's been look at China. I mean, we all know that China is an absolute it's a toilet bowl that's going down and down and down. It's one of the deepest toilet bowls I've ever seen.
China.
What's that?
You're talking about China.
China. Yeah, China.
Yeah,
Banks.
I got a bunch of questions already on everything you said. I don't know if you want to finish up, and then I'll throw a few questions at you on what you've already stated.
Go for it. So the last thing I really want to say is that what is the catalyst coming up? And the only catalyst that I can see is in the financial markets. Something there has to be the trigger for the next recession. It has to be massive bank failures, which the problem is they're hedging the banks. Right now, the banks are, they're increasing all the banks are increasing their cushion here in America. So that has to be something that happens in Europe, as far as I can tell, or some sort of debt default by a major European economy. It's not going to happen here, even though it should have happened 10 years ago. But some kind of major default in debt in a major currency that will send a death spiral into the world economy.
Yeah, well, that's what actually caused the Great Depression. It was the 1931 sovereign debt crisis in Europe, where Europe defaulted on the debt, and that was the cause of the Great Depression, not the stock market collapse. It's just, that history was kind of overwritten on the very communist FDR, everything that came out of that era that people know about is all just a giant lie. Between 1929 all the way up until World War II, most of that was just like a bunch of giant lies, and the history was rewritten. But hey, I got questions for you.
Go for it.
So first off, your new potential venture in buying up high-end items like gold and watches, that's because you're anticipating people desperately having to sell those at, let's say, 40 to 50 cents on the dollar.
Correct, because if you look at middle America, they were out there, lower income, middle income. They were all the ones in line buying up all the watches, buying up all the high-end designer stuff, buying gold, buying jewelry over the last 2 years. And now they're the piper is coming due, and they're going to be the ones. That's going to be the stuff that's liquidated first. And I kind of want to get ahead of that. And I feel that gold is always a good hedge, but only a hedge to reinvest that I don't like the idea of holding gold long. I don't like the idea of holding gold long. I say gold is a play to hide your wealth until the shit hits the bottom, and then you get in there and you use your gold, convert your gold to currency, take that currency, buy at the bottom, and then let whatever you're purchasing go all the way back up.
Gotcha. And let's move over to Asia a little bit, because you do have experience in Asia. I think you've lived over in the Thailand, Vietnam area for a decade, running the club business and more.
Yeah, China,
out
Vietnam, Thailand. Yeah, I lived in a little village in Vietnam for a couple of years straight.
So, two questions there. One, it's very interesting what you're saying about the Vietnamese real estate market. I have not paid attention to that at all. Not that I normally would, but I really like Vietnam and Thailand. I think both of those countries are amazing. And if you can get real estate there on the cheap, I may be interested. So let me know if you're going to end up buying some kind of a complex out there. I wouldn't mind a nice apartment on the other side of the world. So keep me posted on that. That's great to know.
So
but why do you
it is safe.
Yeah, go ahead.
It is safe to buy property in Vietnam and in Thailand, but you have to buy a condo. You can't technically, legally, you can't buy houses in Thailand, but you can buy a condominium, and it's free and clear, no stress. You don't have to worry about it. You're not going to get screwed. Vietnam, though, you can buy houses and you can own houses there. I had an American buddy bought a house. It tried to get kicked out by some Vietnamese. He turned around, took it to court, and won. And the Vietnamese legal system is actually it's fair-ish. It's fair-ish. Not that it's fair anyway.
No, that's good to know. Thanks for the info on that. Now, why do you have such a pessimistic view of China? Because again, I've always stated that I don't know anything that's going on over there, but I'm not as pessimistic on China, and I think that we just don't know what's going on there. But I think they will be fine. I remember like reading and watching all this stuff about their empty ghost cities going as far back as 15 years ago. And that didn't amount to any problems financially. Really, they managed to get out of it. The whole the collapse of that big bank, they managed to be okay. Why do you think China is in such bad shape? And just maybe a little more details on that you know.
So I travel to China pretty regularly. So one of the things is we have a company over there that we use. It's very specific. So they procure all of the goods for us that we use to build our nightclubs over here. So we want to build a new nightclub. We lay everything out, do everything in CAD, all the designs, and then we send everything to them. We then fly over there, and we'll go over there, hit all the factories, visit everyone, and we have a specific crew of people who we deal with, and we've dealt with them for, it's been almost 20 years now. And they are the ones that we really have got. They hold the pulse because they're in that south, right as you cross over the border. What is that, Shenzhen? Right as soon as you cross over the border into Hong Kong border. Yep.
Yeah,
as soon as you
right
cross,
over Hong Kong, Shenzhen. Yeah.
So they're kind of in the heartbeat and the pulse of where all the manufacturing for Vietnam sits, right? And so they're the ones who are feeling the crunch first. So they're the ones who are seeing the slowdowns in the factories closing, the lack of orders. They're the ones who are calling us now saying, hey, we need you to order stuff. Can you help us out? Can you buy stuff? And we still continually order stuff from them. Like I order wristbands, radios. We are all kinds of stuff that we need that we regularly go through for the nightclub. So we do pretty standard orders, $10,000, $20,000 at a time, once every quarter, maybe once every 6 months. And the biggest issue that they're seeing over there is that orders from so China has been trying to switch into an internal consumer-driven economy for the last 20 years. We know that. They've been trying to build their middle class, right? They've been trying to develop their middle class. The challenge with China, though, is that they still rely heavily on exports. So the exports are still such a massive thing for them, and they're still such an energy-dependent country. So they rely heavily on.
Yeah, we see that. We see that in their numbers. It's one of the pinned tweets where the last 2 months they've had a deficit on trade deficit.
They've had a trade deficit. So what you don't realize is that moving even 2 points, 0.2% is a multi-billion-dollar swing for them. Right, it's a lot. If you look at a smaller economy, you see smaller countries, and they're like, "Oh my God, our GDP was 2%." Oh God, and China's been running steady at 5 to 7 for 30 years, 40 years. It's 5 to 7% GDP. It's been insane, and it's finally cooling down. But 1% drop of such a massive number is highly impactful on the whole global economy for China, whereas a 1% drop here in America right now is like, or Europe or wherever it is, 1% of those exports is almost like a drop in the bucket. You barely even notice it. So it's much more substantial there. The other issue is right now, if you look at China, it's the housing crisis that they're going through right now. They have overbuilt. They've clearly overbuilt. And just like we got caught with our hands in the cookie jars in 2006, 2007, 2008, so many Chinese have 2, 3, 4 properties. And the difference between China and here is you realize that the difference is so in China, if you go like, oh, I'm going to buy an investment property, you sign the deal. It's dirt. It's dirt. They're going to build the building. One of those units is going to be yours. You start paying the mortgage the second you sign that contract. Completely different than the rest of the world, where you don't take over or assume that, start paying for that property until it's built. You move in and inspectors come, they inspect it. Then you go to your mortgage company, they sign it, and you get the keys and you get the deed, and it's your property.
Leave and come back.
Right? So that's the difference is those people in China have been paying on properties that are A, never going to get built, B, never going to get filled, and there's too much supply and zero demand.
That is some amazing talk, Chart Vampire. Thanks a lot for that. I also want to ask you a question regarding the rate hike. So currently what the market is expecting is that there is not going to be a rate hike, and the Fed is done with hiking the rates. And obviously they'll start cutting as well by March, 25 basis. But CPI is coming this Thursday, and I can see that you're very on with economics, right? So what do you think about what is happening here? And also want to get some comments on the US downgrade.
Yeah, and also feel free to throw in your market views, right? Because you are a trader as well. I don't know when you find time for everything, man, and a poker player. So I do want you back at Unconfiscatable playing our tournament again, and hopefully make it out to Dubai for the financial summit as well. But yeah, as you talk about the economics and the questions that Kapoor just asked, give us your views on the markets, Bitcoin markets, stock markets as well. Where do you think the prices are going?
Okay, so first up, let's talk about the downgrade. So we just had the second downgrade we've ever had, I think in the last, 70, 80 years. The last one was 2011. Last time we had the downgrade was 2011. Of course, we all know that was the bottom, and I was buying everything in its mother property-wise during that time, just absolutely murdering it. Massive, just absolutely crushed it. 2010, 2011 was the actual bottom for the economy. And if you were out buying property, then in Las Vegas, you could have bought, if you were at the auctions buying properties in Las Vegas, you were buying houses for $99,000 to $120,000. You were buying condos for as low as $29,000.
I was looking at condos on South Beach for $40,000, and like an idiot, I didn't buy them. Those same condos are now 10x at $400,000.
Yep.
Now, I don't really regret my decision.
I wish I would have done Florida.
So I don't regret my decision because I would have literally been trying to scrape together that $40,000. and it would have altered my entire life, and maybe I would have never discovered Bitcoin. So you never know.
Yep, there. Yeah, it's true. It's true. Yeah, especially I'd like to be sitting where you're sitting at right now. So when I grow up, I want to be like Tone. So now with the downgrade,
Yeah, that's true.
with the downgrade, here's the thing. Do I think that really affects anything other than just finally a little spark of truth coming from someone about how really shitty Bidenomics are and how they're affecting the United States? I mean, that finally someone came out and is actually, no, things are actually really shitty. So at least we have somebody who's telling the truth. Because, I mean, look at the jobs reports they put out every quarter, right? Every time the jobs reports come out, oh, it's amazing. Look at all these jobs. 60 days later, oh, it's quietly section page 10 of the New York Times adjusted the jobs report down 80,000 jobs, adjusted the jobs report from 6 months ago or 3 months ago. They keep adjusting them down. They do it in the future. What an absolute, just, you want to make me angry? The lying sacks of shit that are in our government today, it's a crime. It's an absolute crime. Just tell us the truth. We're not stupid. Just tell us the truth. Don't blow smoke up people's ass and then readjust it 3 months later. If you go back, you guys can Google this. They keep adjusting the jobs reports months later. So if you look at the downgrade that we had right now, finally it's someone saying, okay, yes, things are bad. We are going to continue to add 1 trillion to 1.5 trillion in debt. The only difference is all of this new debt is now going to come with a much higher interest. So the payments are going to be absolutely monstrous on this new 1 to 1.5 trillion that we're going to have to take on every single year, and that we're going to continue to take on because nothing is going to change. Nothing. So, especially if we keep heading in the direction we're going with the leadership we have now. Number 2 is my feeling on the economy where we're at right now. I'm still looking at the historic data of the inverted yield curve, which the longest we've made it is 16 months. We're in 11 or 12 months now. I'm still looking at that. I'm still planning that we see an actual drop off, some catalyst that'll kick in. Even though everybody knows whenever an election year comes, which we're 5 months away from an election year. Second election year comes, whoever is in power dumps money into the economy to keep everything going hunky-dory during the election cycle. Democrats do it, Republicans do it, they all do it. So I'm not pointing fingers at either party. Everybody does it. So that is the one positive thing about moving into 2024, is that it is an election year. Usually whoever's in power, irregardless of who it is, floods the economy with money. So that is one hope that we have, that hopefully we can keep this going for a little bit longer, in my view. What was your other question you had? Tone. Oh, I lost you.
So for me, I just wanted to get your take on the markets. Like, do you think S&P is going higher? What do you think of Bitcoin price? What do you think of the actual numbers? I think the S&P is going higher regardless of recession or not, because of the debt issue. People will be scared of government assets, government debt. The bond market is 10 times the size of the equity market. And even though the government is offering a nice return on government bonds, if there's a high probability of a default on those bonds, people will plow their money into the big equity companies, regardless of valuations, because they're scared that a government will default on the bonds. In addition, even in this kind of environment, small companies are going under, benefits the big companies a lot.
So if you look historically and you go back all the way to, every single recession, Great Depression, you go all the way back as far as you can, especially, if you want to go back and talk about, the 29 depression, the Great Depression, if you look at the years leading up to it, the market did an absolute 10x. It was everybody and their mother, everything you touched turned to gold. I want to say the original meme stocks were from 1929, like 1927 and 1929. That's where the original meme stock came from, is everything you put money in turned to absolute gold, and it just went up like Jesus Lord, it skyrocketed until it just couldn't anymore. And if you look at the history of what we've gone through, average is 10 years that we have a cycle, right? We have an economic cycle. We are technically, here's the weirdest thing about this. We didn't go through a natural cycle of an actual recession, but 2020, the COVID shutdowns created an artificial recession. It was a very short-lived recession, but it did create a short-lived recession. And as you know, listen, if you started all the way back in 1929 and a house appreciated at even 2% every single year, right now, you couldn't find a house in the middle of Ohio under $3 million, right? It's a cyclical thing. It has to go up. If it goes up, it comes down. I do feel no matter what, it's not, the problem is not that the institutional investors or the general basic investor is going to go into equities. I don't feel that's what's going to happen. What's going to happen is you have to get panic and fear in order to change the cycle. And when panic and fear hits, everybody's assholes tighten up just like their wallets, and people hold on to their cash. They hoard their cash. They shut down their spending, all the expendable income, all the expendable incomes, all expendable income dries up in every market. Doesn't matter where it is, it starts to dry up. And that's going to include, if you look back historically, every time there is a recession, every time there is a catastrophe that occurs, the equities markets do fall off. You want them to fall off. We all want them to fall off, because the idea of getting ahead in life is buying low and selling high. The basic, if you look at Bitcoin, and this is something that I've learned, this is a lesson that I had learned long before Bitcoin, right? The way you get rich with Bitcoin, with crypto, is you buy low and you sell high. It's that simple, right? Now, you can short the market. Of course, puts are a huge option, and that was my specialty. My specialty was shorting the market. But we all need, for the economy to crash, we need a reset. We need this. We need inflation to pull back, real inflation. We need housing prices to pull back. They're out of fucking control still. There's a stalemate between buyers and sellers. Sellers don't want to sell their house because they can't go out and buy a house that's better for cheaper. If you sell your house, you're going to go out and buy a like or equal or better house. The idea is always to buy a better house. But now you're going to go out and buy a better house, and you're going to have to pay $1,200, $1,500, $2,000 more because interest rates are so sky high. And it doesn't matter who you are. So we want the equity markets to crash. We want a pullback. We shouldn't be hoping for things to keep going higher. We should hope for things to come back to earth so we can rebuy, enter into the market a second time, and then let it run up and then sell again. I just feel we have hit the top in spending. We have hit the top in middle America, lower income, middle income, even middle upper income. We have hit the limit, right? People now realize, oh shit, like I just don't have as much cash in the bank as readily accessible as I did. Savings accounts are dropping. Credit cards, credit card balances are higher than ever. We want everything to pull back and crash. It's how the rich get richer. It's how the middle class gets richer.
Right. Well, what we want and what is likely to happen are very, very different things. Now, I still
What
think
is likely to happen, though, is panic and fear. That's
the
what's
equity market.
likely to happen in everything.
In everything.
Equity, in everything. It's going to happen. It's just what is going to be the trigger.
Yeah, Chris. So this is where you and I will disagree slightly. I don't believe in an everything bubble. Something always goes up. Like, yes, many things crash, but something goes up. Right. And I think I am
commodities.
Right. I am bullish on commodities. I am bullish on equities, and I am bullish on Bitcoin. But I am bearish on the biggest gorilla market of them all, which is government bonds. And I am waiting for that to fall. Yep.
Oh, God, yeah. Oh, yeah. The bond market right now has been a boon. If you've been in the bond market for the last 2 years, you've murdered it. Absolutely murdered it. So the bond market has done phenomenal.
So, well, what's your view on the price of Bitcoin then?
I still feel that Bitcoin is. Here's my issue. You just had the FTX guy. They just released him on all charges, right?
Not all charges, but I believe he will. We had a big debate on this on my law show. I think he's not doing a single day in prison, and the lawyers seem to disagree. But yeah, they dropped the worst of the charges, which is the election, the donation stuff. They dropped that.
Yeah. Anybody ever see? You guys ever hear that comedian, that funny Chinese comedian? He's like the reason he doesn't have a highway phone, phone, is because the Chinese they listen to the phone. He's like, I love Chairman Mao. I love Chairman Mao. My credit. What does he say? My credit score just went up, right? His what is it? What the hell is that? Social credit score just went up.
Credit score,
I just want you to. Tone Vays is a very strong supporter of the Democratic Party. I would just like to say that, get that on record.
I am registered as a Democrat, so I get a say in their candidate.
Exactly. Yeah, very smart man. Just listen. Just keep donating the money. You're gonna be great. Just keep donating a little bit at a time. You're gonna be fine. But yeah, I mean, come on, man. That guy. How does that guy not gonna go to jail? How does he get away from the worst charges? That's my issue. I mean, my problem is, I feel that crypto is always going to be a good commodity. Crypto is always a good commodity. Crypto is always a good hedge. And it should be. It's gold. It's just fucking gold. That's all it is. It's digital gold. I just wish there was less regulation. The only thing I don't like that's happened over the past couple of years is the amount of regulation that's gone into Bitcoin. That is my only downside to Bitcoin right now, is I just hate all the freaking regulation that's being put onto it. It's eventually, shit, BlackRock is in it right now. Dude, as soon as BlackRock got into it, it's like, shit, that's not a positive sign for me. But it's great for Bitcoin because an institutional investor like that is a part of it. But I prefer Bitcoin with less regulation. I prefer the old Wild West, good old Wild West days of Bitcoin.
So are you buying back yet or what? Or are you still waiting for a bit of a panic?
Nope, I'm waiting. I literally, I'll share my chart that I have an ongoing chart with a trend line, and it's literally just been absolute perfect following what I've wanted. I did post a while ago. I just haven't updated the post, but once I update the post, you'll see it's doing exactly what I expected it to do. I still expect for us to go up from here. I expect another bump up. I've always expected 34, 35,000. Still think we're going to get there. And a nice panic in equities would do that. A nice panic in the world economy would do that. It would be a boon for Bitcoin. I think people would pour into it as a hedge. But for me, I still see Bitcoin going up from here before it comes back down.
All right, cool. Yeah, throw up you don't tweet that often. See if you can throw up some charts, and then we'll get you back on the spaces either mid this week or next weekend. We'll try to stay in touch. Tell me what's your medium, right? So I DM you on Telegram, on WhatsApp, and on
Yeah,
Twitter. Which one's
I
best?
was actually I was over in Europe for like
I
almost
know.
3 weeks. I
Running with the
sent you
bulls.
videos
I'm
running
glad
with
you
the
came back alive.
bulls. That's right. That's right, dude. Listen. We're gonna go again. You got to come with us. It was absolutely amazing.
All right. Yeah, this is how Tone gets in trouble. Hanging out with crazy people that used to run clubs in Thailand. Perfect.
That's right. Listen, it doesn't even count if you don't make eye contact with the lady boys.
Oh God.
I'm kidding. All right. So if you guys have any more questions, anybody else? Anything?
I mean, if you're okay, if you have some time, I would really follow up in this last comment that you made that people would like go into Bitcoin as a hedge from the equities. I mean, in what we have seen so far, it's always a risk-off asset. Like if there is some kind of panic and chaos, people actually risk off from Bitcoin first, and then maybe equities further coming up. And I actually resonate with your uh, ideology of a panic coming and kind of a shakedown before going up. But just, I mean, what do you think about the correlation? Just for
So here's the thing. Bitcoin has drastically changed over the last 2 years. I'm talking drastically changed. Like, in fact, today I would have more confidence as an institutional investor in Bitcoin than I would have 2 years ago, right? I feel that Bitcoin has also just look where we are today with crypto. 2 years ago, they made fun of us on every single news station. We were a joke to them. We were nowhere. CNBC, all that. I mean, we were nothing. Now the markets are tied together. I just heard an article the other day. I was just listening to something the other day, and they're just like, oh yeah, Bitcoin and the equities markets are tied together. What the fuck? You haven't been saying this shit except for the last year and a half, 2 years. Like, we were nothing 2 years ago to the mainstream media. Now Bitcoin is it's an accepted form of an equity, right? I know people hate to hear that, but that, tying the word equity and Bitcoin together, but it's acceptable now. And it is still, no matter what people say, it is still not tied to performance in equity markets, right? Bitcoin is a safe haven. It always shall stay a safe haven. That's what it will be. It'll always be a safe haven from volatile other external markets, equities markets, right? And people now have more trust in it than they did 2 years ago. Oh my God, Tone, do you remember how I mean, come on, you guys have all got to been in the space for a couple of years now, right? 2-3 years ago, it was, oh my God, they made so much fun of us. Oh, guys, come on. We were the butt of every single joke when when the bottom fell out of Bitcoin. What was that, 2018, 17? 18. 2008. When the bottom fell out, we were the butt of every single joke in the whole world, right? They just made fun of us. That's all they did, was make fun of us. Right now, look, here we are, 2023, and oh my God, look at how tied Bitcoin is to equities, right? It's how times have changed. There's more trust in the system now than there ever has been. There's more confidence in Bitcoin now from Joe Schmo, I don't know investor than there ever has been. And I still feel the problem is equities are still tied to hard data. They're tied to consumption. They're tied to profit and loss statements. And this is something, there's just no profit and loss statements in Bitcoin. You don't need it. There's nothing. There's no P&Ls. I mean, I always used to tell people this. You show me a crypto that's got a P&L, and I'll show you an actual, a legitimate crypto, right? An actual company that's doing something. Cryptos is a commodity, no different than every other commodity out there, like gold and silver and platinum and all these other commodities as such like that. And I still feel that when the bottom falls out this next time, you will see more people getting into crypto because look at your other options. Your only other option is getting into an ETF, right? So let's look at a gold ETF. One of the problems with gold ETFs is that they charge you to hold your physical gold. So you're constantly losing money in gold ETFs. And yes, I do hold a large amount of money in a gold ETF. Like, I have a lot of money in a gold ETF. That is my hedge right now, one of my hedges. And I'm just waiting to pull the trigger and pull all that out and dump that into equities when the bottom falls out. And that could, whoever knows when that's going to happen, it's eventually going to happen. But if you put your money into a gold ETF, those gold ETFs actually charge you to hold that physical gold. That's number one. Number two is you can't just go out. It ain't easy just to go out and buy bars of gold. It ain't easy. How are you gonna? You need to go convert money, or if you want to go buy, cash for gold, or you want to go into a bullion center and buy bullion. Like, it's just not that easy to do anymore, right? It's not as easy as like going down and buying a soda or buying an equity on your stock trading app, right? It's not that simple anymore. So I still feel that when equities do tank, commodities are going to be the winner. Bitcoin is going to be a winner, and those things are going to be the hedge. And it might only be a short term, but who cares? Short term wins are still a win.
So
all right, yeah, go ahead, Bernoulli.
When you say the bottom falls out, like, do you mean you're expecting a lower low in the S&P, for example?
I am expecting for the fucking economy to take an absolute fucking shit. Now, how far that shit's going to be, I don't know. But there's a 90% chance that we're already sliding into a recession. I actually feel we've been into a recession for the last 2 quarters. I feel we've been in a recession for the last 2 quarters. I feel that the numbers are complete shit. They're complete fucking shit. And I sent this to Tone. How are you figuring out these GDP numbers? How much of the billions and billions of dollars that they're pouring out for wink, wink, Ukraine, that's going into the defense industry, you have billions and billions of dollars that are going into the defense industry here in America that are then supposed to be earmarked for Ukraine, right? Because they sure as shit aren't. What are they buying? What are they sending to Ukraine? U.S. shit. Right? They're sending all of our old stuff over there, and they're just they're making new stuff with the cash. So they're shipping them all these MRAMs and everything.
They're giving Ukraine the old weapons, and they put that in the balance sheet, and now they're using the money that the stuff would cost to replace, but we're keeping the good stuff.
Exactly. And now those billions of dollars they've pumped are part of GDP.
Yeah, I mean, the U.S. military establishment basically used Ukraine to upgrade their military equipment, and unfortunately, U.S. doesn't have enough good engineers or manufacturing, so the equipment might be shiny and new, but it's not much better from the 1970s.
But we're taking that money and we're actually building new equipment with it, and we're just shipping them all our old shit that was fucking just shit. It's just shit. It's all our Iraq war shit. It's all the MRABs and all the armored up vehicles and all that stuff. We're just shipping it all over there. That's all it is. And that part of that, those billions are just going into the GDP of that they're counting. And do you really count that as part of GDP? No, I don't. I mean, it is going back into the US economy.
Look, the GDP numbers have always been insane, right? Like here's the crazier example: is that healthcare spending factors into GDP. So the sicker your population, the higher your GDP.
Yeah, I didn't know that.
Yeah, well, government spending on healthcare is like, if government spends more money on healthcare, hey, the economy is booming. Right, but that's because everyone's sick.
Exactly. Yes, exactly. Yeah. So I feel we've been into a recession for the last 2 quarters at least. And I just see that we are coming to a point where people are just, listen, they're doing it on purpose too. They're sucking the money out of the economy. Okay? This is one reason why none of you want currency to ever go away. I don't care who you are, you never, ever, ever. Listen, here's the bad. This is the worst part about credit cards, about wire transfers, about Bitcoin. This is the worst part about all of it. Okay? This is the difference between hard cash and electronic currencies, is the little bit that they want to skim off of the top from every single transaction makes the entire country a little bit poorer, right? That transaction fee that occurs, like you guys can't imagine on my businesses, and my businesses probably do $20 million a year in revenue, total revenue, right? 70% is credit cards. Of that 70%, I pay 3.5, 3.8% on transaction fees. Do the math of 3.8, 3.5% on $16 million. It's a lot. And the problem is, if you look at what Australia just did, Australia is getting rid of currency and they're going all digital currency. They're trying. Hopefully they won't be able to do it. But the government, the Australian government, is going to be able to bleed off billions of dollars through those little tiny fees that really add up, right? I'm telling you guys, I pay $250,000 in fees. Somebody do the math. What's the math on 3.5? I know it's a lot. It's a lot. 3.5% of 16 million. It's a shitload. I know this. So
560,000.
yeah, it's
half a
insane.
mil. It's half a mil.
It's insane. I pay that in credit card transaction fees to the banks and to a third-party processor. Now, the majority of it goes to the banks, right? But that's how they make all their damn money. And Australia is doing the same thing with the digital currency. Any country that moves to a digital currency is going to do the same thing, right? U.S. government.
But that's great for Bitcoin, right? Like as physical cash goes away, people will seek an alternative. So the elimination of cash is one of the greatest things for Bitcoin. It's bad for humanity, but it's great for Bitcoin.
Fees. It's the fees, the gas fees. It's the fees that take to transfer Bitcoin are still expensive. It still costs something. That's why currency is still a good thing, because there's zero cost in the transaction.
No. I'm not going to let you get away with that. The Lightning Network, the fees are extremely low, even on chain. If I want to move $100,000 worth of Bitcoin, the percentage is very low.
But if you want to move, who moves 100 grand? Who moves 100
But I'm
grand?
just saying,
I'm
giving you two scenarios. Okay, let's say you're a jeweler and you're selling things for an average of $5,000 or something. You can probably do that on the Lightning Network.
Correct. Specifically, no. Vamps is a club owner, so his average. I mean, if someone's buying a bottle, it's a few million. But if someone is buying a single drink, it's $7.
$7. So I do
the fees on that would be zero. The fees on that would be zero. Okay, zero. Okay. Just use Wallet of Satoshi.
Maybe.
So it would be. But, so if I accept Bitcoin at the bar, which I don't, if I accept Bitcoin at the bar, there's zero fees in accepting that Bitcoin.
With Lightning, it's close to zero, but it is going to be a big learning curve for every bartender to know what they're doing. I mean, I've ran a physical business, and not enough people are constantly coming in paying with it. Retraining the staff and constantly reminding them is a nightmare. So eventually the ball will get rolling on it, where every single day multiple people are using it. But until that happens, the training of your staff is a bit of a nightmare in my experience.
Yeah, we have a few bars here in Austin that accept Bitcoin. Big shout out to Shiners. You can always find the Bitcoiners there. And they do accept Lightning also, and all of the food trucks in Austin accept Lightning payments.
Got it. Yeah, I never looked into that.
All good things take time, Chart. I mean, all good things take time, right? But let's look 10 years in the future from where we are now, And businesses that are going to accept Bitcoin are going to have a competitive advantage because Bitcoiners will go out of their way to patronize them. Well, even if it's only, 1 or 2% of their business are Bitcoiners going out of their way to do business with them. That's a 1 to 2% advantage over their competitor who's not doing that. So the game theory is going to play out. Eventually, all these businesses will have to accept Bitcoin because otherwise they won't be able to be competitive.
So here's a question to you guys. Why aren't more businesses accepting Bitcoin?
It's
Why?
still very early. Only 1% of the people have a clue about Bitcoin. 1%. We got
Why?
99% to go.
Why hasn't somebody started a company that's no different than like a PayPal and going out there and educating people and guaranteeing people, like, what a great business
No, but
concept to go out there and
there are. I mean, there were two. I mean, Coinbase and BitPay. Is just that we don't like those companies, but these
yeah.
companies were doing that. They're just not. They're trying to centralize Bitcoin a little bit. Eventually, when enough people have Bitcoin, it's slowly advancing. I mean, I would say within 3 years, by 2026, you're going to be accepting Bitcoin Lightning payments in all your bars. A few more years, and it will be popular enough and simple enough to use.
Yeah, I just don't know why it hasn't
Would you
happened already.
would you say
People
10
trust it.
years, Tone, would you say in 10 years the majority of businesses will be accepting Bitcoin?
I'd say in 10 years, more than 50% of every business in the world will be accepting Bitcoin in 10 years.
So there we go. That's fine. That's not very long from now, right? 10 years is nothing.
Right, because look at it. Like in 10 years, Bitcoin would be 25 years old. Now, if we back up to the days of the internet, right? Like if you say you first started like using the internet in the mid 1990s, you take that, or if you go back to 1990, you add 25 years. Every single business had a website. After 25 years of using the internet in the most frustrating way possible. When I got to college, and I don't want to date myself, but I got to college in the late 90s, I had to use Unix commands to read a freaking email at a college. I had to go like G++ and like literally Unix commands to read an email. And that was in the mid to late 90s. So how long did it take for every single business to have a website? I'd say by 2015, every business had a website. That's 25 years from 1990. So Bitcoin's 25-year birth date, I'm expecting half the businesses in the world to accept it.
And that's the whole thing, as far as I'm concerned. That's the whole Bitcoin play, is adoption. That's why we can't compare Bitcoin to gold or any other commodities or equities or stocks or any of those things. People already know about those things. There's a large percentage of the people that don't know about Bitcoin yet. So it's a question of growth, and adoption is the play on Bitcoin. That's why it's smart to get into Bitcoin now, because Bitcoin has gotten to the point where it can't be shut down. It's being accepted by the United States government. They're not going to try to shut it down. And if they're not going to try to shut it down, nobody's going to try to shut it down. So that ship has sailed. So now it's just a question of adoption, and the adoption is continuing. So anybody that gets in anytime in the next probably 4 or 5 years is still going to be early. So why not get in now? So I think that's what a lot of people miss when they talk about investments and equities and all of these things. You can't compare them to Bitcoin because a lot of people are uneducated on Bitcoin.
Yeah. Okay. So we actually, I'm going to let the guys wrap the space up. We try not to go longer than 2 hours, but this is a great transition. That just like the Financial Summit is hosting weekly spaces, the Unconfiscatable handle is likely to start also hosting weekly Twitter spaces, and those would be a lot more focused on Bitcoin, while the Financial Summit spaces do tend to focus a bit on the economy, because we can definitely go down the Bitcoin rabbit hole for a while and forever and ever and ever. All right, I'm going to hand it off to the hosts so they can wrap it up, unless someone else has a question for myself or Char Vampire about, economics, finance, markets. Last question, go for it.
Well, I do have a quick comment, and that is just, Char Vampire is right about I think there's still a lot of work to be done on the user interface and making it really straightforward to, train your employees and, but it's happening, but there's still a lot of work to be done there.
Elon Musk is going to do it with his new. He's going to be using crypto for his new payment platform thing that he's putting together, trying to take over the world with.
Yeah, we'll see how that works out for him. I don't think he's going to be using Bitcoin. His ego's too big.
Actually, to comment on that, I just recently read a news where Elon Musk is having a meeting with Tim Cook for some financial. It's about to be about some kind of payment gateway. I don't know if it's about crypto or not. We have to wait to see that. But before wrapping up, I was wondering if we could just talk a bit, like a few minutes, about okay. Everybody here is sound technical analyst, and I would just love to, because we were talking about Bollinger Bands earlier. Would if anybody would like to share what their technical levels are for the market coming up for the next week, would be great, and we just wrap it up.
I'll go first. I think that we're going to have a little more downside. I am leaning slightly bearish for the next 1 to 2 weeks. I don't see us going below 27K, but somewhere in the low 28 or upper 27 is very, very likely. Then from there, I am looking for a run up as high as between 34 and like 39K, followed by another frustrated drop as far down as 31, 32, and that could last all the way into the halving.
Chris, if you would like to add something from your, I'm sure you are great. I've heard about your charts and your trades from FinSummit.
I literally was trying to pull my chart up right now. I literally was trying to pull my chart up on TradingView. I've got my mobile app right here. Hold on a second. So I agree with Tone. I agree. I'm not worried about too big of a pullback, and I still think we're going up. I still think, ride sideways. We've been riding sideways for long enough now, which I always love. I love consolidation. I love seeing consolidation in the market because that just means that there's a nice big fat move coming. And I just see, I still see the move to the upside and then before we pull back. But I'm still looking for 34, 35,000. Still looking for 34, 35 before we get a pullback.
I guess that's it. We wrap it here. And all I can say is pump it up.
Thanks, man. Vamps, man. The events, put them on your calendar. Dubai, November 5th to 10th for the financial summit, and then Unconfiscatable. You've been there before. You know what it's like. We're going to play some poker.
Ooh, Dubai. Ooh, boy. All right, that one's very, very tempting. Yeah, Unconfiscatable for sure. For sure. I'm gonna repost it. I'm gonna DM you, and then I'll repost everything for it. Okay.
Sounds good. Yep, and come join these spaces more often, man. They're great. Really like your commentary here.
Dude, you have my cell phone. Just hit me up on my cell.
All right, I'll do that.
Best way to reach me.
All right, later, man.
Yeah. All right, later, you guys. Thank you. Great being here.
Thank you so much for being on the panel, guys. It's always productive. It's great value. I guess same for the listeners. Also for the people who don't know about the FinSummit, just to give you context, it's a ILR event where people like entrepreneurs, traders, business managers, all of them come together to pitch their ideas, talk about the current projects, future projects, outlook of the markets, and everything from playing poker to having a vacation, all in the 5 days under one roof in a luxury vacation-like structure. So go in the bio, go to the link, read about it, see the video. You can actually book your space and come back on next week with the spaces. We do 2 of these, one in the mid of the week, one the weekend. So I guess see you in the next one. Thank you for listening. Thank you for people on the panel. Great time. Thanks again.